G'day there. Welcome to the Closing Bell. Recording this at midday on the 5th of May, the Friday. And look, there's a lot going on. Interest rate rise in the US, but people expecting there's a pause now underway. More banks in trouble, rates falling, yield curve steepening, gold rallying, oil getting hammered, and stocks starting to look a bit weak, but not really tipping over majorly yet. So there's a bit to cover and think about. And I guess gold is the one that I'm going to really focus in on today, having breached through the all-time high during the week. Very interesting. It's sort of working its way through. You know that I've been sort of following this along for quite a while. And this is the weekly chart of gold. And this correction's been going on a couple of years. So it's getting a bit long in the tooth. You'll notice back here, we had a sort of sideways motion for a couple of years there, and that eventually broke out to the upside, seeing a nice strong trend. And I guess we're wondering, is this now end of the correction, breakout coming, and ready for a really big run? It does make sense that we could see quite a move in gold with, rates possibly near their terminal level, where rates may end up even getting cut, banks in trouble. A bit of safe haven buying isn't a bad thing, I think, at the moment. Inflation still sticky. Lots of things adding up to gold catching a bid. So there is a chance that we do see this bust out. But you should know by now, I really don't like buying breakouts. That's not where the money's made. I think it's very high risk just buying a breakout, because you so often get the false break of those highs and, return to the midpoint, the point of control. So I'm always wary of those things. That's why I was talking to you months ago saying that this was the good opportunity when we saw the false break of the low in direction of that longer term trend. That was the point to be buying gold stocks, and as the breakout through the midpoint as well. But up here, this is a much higher risk proposition, talking about what's going to happen. And that's why the idea is to be in your position from this sort of level where you've only risked a small amount to find out if you're right. And then when it's at the top of the range, you're really thinking about taking part profits so that you can have a free option, see what's coming next. So whatever happens here, that could be the end of it. What if we have a little false break of the all-time high and then things turn down? I mean, that's possible. So you want to make sure you're always on the front foot and taking profits when the risk gets higher, that prices could go either way. So this is sort of the main idea, and that's why I don't want to make big statements about breakouts. But the situation is such that we could be getting closer to a nice, serious breakout, even if we do see a run, and look, it makes it up to that sort of 2100 level, which is that level 25% outside this range. And you can see on the bottom side, I've got that level as well, 25% below the range. And you can see that prices got pretty close to that on that false break. So it's sort of an area where I expect to see reversals. So I'd really like to see this actually have a shot at that sort of level. And look, from there, anything can happen, but it just gives a sense of strength if we could see something like that. So I'd really love to see gold continue to the upside, but it is sort of at that high risk point, I guess. You know that there's been a lot of resistance in this area before. It's had a little peak up there. Look, it could still be in a corrective phase, but all very bullish still. Really, I'm bullish as long as it's holding above that point of control in gold, and that's around 1880, let's say, in US dollars. So above there, very happy to stay pretty bullish on gold, and I guess below that wave low is where I'd get pretty nervous, below $1,800. So, you know, in this window, this is sort of the area where I start shifting my view, 1800 to 1880, getting a bit more concerned. But above there, it's looking pretty constructive, and the situation is definitely such that I could see some sort of a safe haven buying. Let's say commercial real estate really has a big problem in the US. Markets take fright, banks falling over, inflation still sticky. Well, why wouldn't you be buying gold? Maybe that is the sort of thing that will end up creating that big bust up to new all-time highs, and give the market a chance to do one of these sort of moves where it becomes out of balance again and really starts to take off. So definitely interesting. And you'll probably remember that I showed you just a few weeks ago this little stock, Westgold. Just interesting to follow up on that for people who have been watching. You remember I was looking at this and saying, you know, what's the midpoint of this whole range? And I think that came in around just below $2 or something. So it's still not quite there yet, but you know, I was giving you this stock, I think around here, around $1.25, as it was starting to take off. Saying that, look, this is looking pretty good. And we've had the retest of the low of the range recently, big sell-off, big clear out of positions, and then turning back up. And then I got interested when it turned up a second time, saying, well, watch out here, this could be on. And look at that. It's moved from around $1.25 when I told you about it, up to $1.70 now, in a straight line. So that's the sort of trades you want, isn't it? But they're very rare to come by at the moment in this very difficult market environment. But just showing you what can happen when you're keeping an eye on these things. And even though you've got to be patient and there's not much out there, you know, you really can find things though every now and again based on the structures that I'm looking at. So moving on to the S&P, and look, it's a fascinating moment, I think. It's been so dull. The market has just died completely after we've had this rally. This is a monthly chart. This is the 2020 crash and the rally. So you can just see the waves that I'm looking at. And, you know, it's pretty much rallied from, I'll just give the overall view. So we've got this wave to the upside. We've had the correction to the point of control. And now we've had this rally up into resistance. And this is why I'm saying the market has just died, where it's sort of rallied up to the midpoint of the correction, but also the bottom of this sell zone, this being the sell zone of this whole wave higher from 2020. So this is the area where the selling pressure should be. And it's sort of been bumping up against it for months now. It initially also got rejected from this zone before. So the question is the selling pressure there? And when the momentum shift to the downside, we know it can be quite rapid once the music stops. And if you look at the trends, you know, it is still in downtrend. I've got the 10-month exponential still below that 20-month simple. And again, that's where the selling pressure is coming in. So the question is, back below that 10-month exponential, is usually where the momentum kicks in to the downside. So the question is, are we near the end of this buying pressure for many months? And what happens below there? Does it kick to the downside? And if it does bust the low from last year, that's where I'm worried that you're going to see something like that heading into the buy zone. And I'd probably be a pretty keen buyer down there. I've said all this before to people. But that's a long way down, 4,000 to 2,800. That's a potential here. And these setups don't happen very often. We've got the momentum. Sorry, can't speak. The momentum actually turning down, and things take so long to take shape. We've had a year or more. This correction has been going on, and look, it could all still end up, kicking higher, and that long-term trend could take off again. So imagine something like that. This could be on the cards. So it's a really interesting time where you're saying, right, there's so much bad news around. This should really be kicking lower, I'd say. Sell-in may go away. So really the odds are that you'd think this is what we're about to witness down the track. So that's sort of where I'm leaning. But if the market can hold in there and, the Fed pauses rates, things sort of soft landing, maybe it's just going to hold in there and the long-term trend will turn up. So it's, it really is pretty touch and go. But just the way it's looking, big picture, is you got to watch out about what's going to happen below there. So just looking at the daily, so you can see the 200-day. So looking at this daily, we know the weekly trend is actually still up. You can see that the upside waves are still intact. So we're sort of at that area. We know the 43.50 above there, everything sort of switches and we can have a big rally. And we're still below there. So we're still getting rejected, still all that selling pressure. So the question is this about to have a week of selling pressure, because it's had a bit of a few bad days now? Are we going to see something like that, say, next week and tip below that 200-day moving average, which is so important? So that's the question on my mind at the moment. It looks like it could do that, but it would be under the 200-day moving average is when you'd start getting really nervous. And below 3,800, the low of that wave, that's when things could really tip over. So there's a few dominoes lined up here that look pretty negative. But, we're not quite there yet, are we? Does it hit that 200-day moving average? Sorry. Hit that 200-day and take off? Boy, no one would expect that. And back up through 43.50, I'd be amazed. But just the way that upside structure is, you have to be prepared for anything. So I'm going to get really bearish below that around 4,000. But I think we're at risk where we could have a pretty quick trip to that point over this next week. So pretty interesting out there. Let's just have a look at the ASX 200 quickly. Our market has just been so incredibly dull. I mean, it's just, it really is pulling out your hair, sort of a market at the moment. It's just a nightmare. But if we're looking at the resistance levels, the all-time highs, you can see we've just been going nowhere fast. But the momentum has turned back down. And this is where I'm sort of looking at these waves to the downside. That's the all-time high there. And I'm keeping an eye on the sell zones through here and the point of control you can see there. And we're looking at, this is where the resistance should be. And we've seen it a number of times and we're seeing it again. So the question is, we've got the weekly sell pivot big sell-off through the 20-week moving average. Are we about to see yet another visit to the point of control? And if that gives way, you've got a target down to that area, the buy zone of that area, so around 64 to 6,600. So, you know, it's been a negative week. So let's see if it heads back above those highs. Happy to get bullish, but this is just looking a bit dangerous to me right now. And I'd expect there to be a bit more to come, and that we probably will visit that point of control. All right, that's enough for this week. Hopefully you've had a look at some of those gold stocks I've given you. Things have been going well. Say so in the comments if you have. Subscribe as well to this. And I'll chat to you next week. Cheers.